Hello, everyone from Greenville, South Carolina. My name is Rachel Deshelle. I'm your newest coach here on Schwab Coaching. Today, we're going to cover just looking for some candlestick patterns at support, finding a few flag formations, and then going through one idea on how to scan for breakouts. We do have Scott in the chat today, so please chat in your questions and comments during the session today. There will possibly be a survey out there, so fill that out as well. I would love to hear your feedback. Also, you can follow Scott and I on X, Scott Thompson CS and Rachel CS. I know personally, I post a ton of charts. I look for things from a technical lens when looking at the market. So that tends to be a lot of my content. And please subscribe to Trader Talk Schwab Coaching on YouTube. Now, before we get started diving into the agenda, let's just cover a few different disclosures. So options carry a high level of risk, are not suitable for all investors. The information here is for general and informational and educational purposes only, should not be considered any individualized recommendation or advice. And while this webcast will go through technical analysis, which is just one approach, other approaches, including fundamental analysis, may have different views, and we recommend not using just technical analysis as your sole means of investment research here. So let's go through the agenda today. So the first thing we're going to go through an announcement of some upcoming events. We're going to do a quick market overview of just kind of some things that we've been seeing in the market the last few days. We're going to review our old trades, place some new example ones, and then we're going to go through some trade management as well, and maybe look for some future setups too. So let's dive in here to Think or Swim, and or I guess we were going to go through the announcements first. Let me pull that back up here. The announcements as far as our upcoming workshops and market drive events. We have an upcoming one in Anaheim. That's our market drive on November 22nd. We will be in Houston, December 11th and 12th. I will be there. So if you're there, please say hi. And then we have our last one of the year in Miami, our advanced options workshop on December 19th and 20th. Now we can pivot over to Think or Swim. So let's dive into what the markets are doing. So starting with the Dow Jones Industrial Average, we can see we've had a little bit of a pullback that really kind of started on Friday, where we had that major break of that 20 period simple moving average as support. We dipped as far below as our next support level, being that 50-day simple moving average on the Dow, actually closing below that near the low of the day. And then this week, we're seeing a little bit more of a bounce up. So looking like a support bounce, and we're kind of fiddling with that 20-day simple moving average, which I think right now is going to be kind of the biggest battle that bulls will have to face, is that 20-day. Now let's take a look at the NASDAQ. Similar thing here. Now we didn't dive all the way down to our 50 period moving average. I think we were still about a percentage point or a little bit more from that 50 period. But we found horizontal support right around, let's say, 22,200. We caught that level yesterday, and we bounced back up from that horizontal support. We're again fighting with that 20-day simple moving average. So it's a similar theme here in these major market indices. Now, next thing, S&P 500. Looks very similar to what we saw on the NASDAQ, but we came a little bit closer to that 50 period moving average, which also kind of coincided with that horizontal support of 65.45 that we're seeing there, which served as that bounce for the S&P. And then again, just kind of working with that 20 period simple moving average that it seems like all of them are trying to kind of battle against right now. Let's switch to the VIX. And I'm actually going to take these two moving averages off and put on the 200 period moving average for the VIX. And this will kind of show you just the mean reverting nature of the VIX, the volatility index, which is really that fear gauge in the market. We've seen we were kind of low for a while, and low volatility tends to switch to high volatility for its mean reverting nature. And we saw on Friday, we had that massive spike in the VIX, which took it well above its 200-day moving average. And we've kind of been right around that level as as its near-term support right now that it's acting as, just as we are kind of getting through this little bit of a more volatile patch in the market that we're seeing here. And a lot of times traders will keep an eye on the value of the VIX, because when it's over 20, that indicates a little bit more elevated fear in the market. And a VIX of about 20 equates to about a 1.25 daily move in the S&P 500. So just kind of expect more volatility as we go, with that VIX still being above its 200 period simple moving average and now being at 21 there. Now, the last thing on our markets overview that I really wanted to pull up, because it relates to what we are discussing today, which is price patterns. This is another one of the indexes that I'm looking at, and I'm just going to pull up the Russell 2000, which is our small cap index, versus the S&P 500, which is our large cap index. And I'm seeing a little bit of a pattern here, so maybe tell me what you are seeing in the chat here on this pattern. Now, for those of you not familiar with this style of charting, it is called ratio analysis or relative strength. And I just created this chart by adding a relative strength study here. But it's basically a ratio comparison of a security or asset or index compared to a benchmark. And so in this case, I want to get an idea of what's outperforming versus underperforming. And with the Russell, we can just see it kind of obviously was underperforming the S&P 500 because the line was going down for the first half of this year. It kind of based out a little bit, trading in a little bit of a range. And ever since, it's been in an uptrend, really outperforming the S&P 500. But with this entire move, we can see that small caps are actually forming a bullish basing pattern relative to the S&P 500. So small caps looking like they may kind of just taking this pattern, may continue to outperform large caps in this case. So I thought I'd bring a little bit of a different chart here today on our market overview. So hopefully that helps. Now, another reminder as we kind of go through our charting today, which is a charting tip that I shared last week on this show, was just when we're looking at longer term time frames, specifically a year or longer, something you may want to do is go to your price axis set to a log scale, just that logarithmic scale that's going to show price. It's going to take the scale of the price and put it in percentage moves rather than dollar moves. So it gives you a little bit more of a kind of easier picture to digest on the gravity of the price action. Because I mean, if we're comparing a $5 move in a stock from when the stock runs from $5 to $10 versus 100 to 105, that move is going to look a lot more dramatic on kind of like the smaller portion of that price action. So that's kind of why we're switching to a log scale there. But let's take a look at some of the trades that we placed last week in this session. So let's start with our ADM trade. And we placed a trade on this because we found a flag pattern, and we actually got stopped out of our trade. So how do we know that we're wrong when we're in a trade? We get stopped out. And this was precisely the candle where we got stopped out, which was yesterday. And then of course it bounced back today. So that happens sometimes. We are still sticking to our rules though. Price re-entered the pattern, so we are out of that trade. We took a little bit of a loss on Archer Daniels there. Now let's take a look at CNP, because that was the other trade that we placed last week. We are still in that trade. So we kind of called out that we were looking at an ascending triangle pattern where we saw the lows getting higher. We saw a break of resistance. Now we had a teeny dip down, especially from like Friday's price action. We had a tiny dip down back into the pattern, but thankfully we didn't have our stop too tight to where we got triggered. So we put it, I believe we put it 2% below that neckline to give a little bit of space in case we did have a little bit of a failure, in case price did re-enter the pattern. So we are still in that trade now, price trading above its resistance again. Now let's take a look at a couple other patterns that I've spotted in the market this week. So the first one I'm going to start out with is Amgen. So what pattern are you seeing here? Because I think I already gave you a little bit of a hint by my drawings here, but I'm seeing right at kind of these lows in price, I noticed that a flag pattern or a pennant pattern was taking place here, where we had that strong upwards move, which only took 2 days for it to create that flagpole. And then we've had about a week and a half of consolidation, and we're seeing the first sign of a little bit of a breakout from that flag today. So now, a lot of you are saying bull flag in the chat, and I would definitely agree with you. So those of you that haven't seen this pattern before, this is a bullish continuation pattern where we have the start of the move, strong strong uptrend kind of leading up to a little bit of a consolidation or a little bit of a pullback that doesn't result in more than a 50% pullback from that initial move. And then we typically see another move higher from there, just kind of, that's why it's a bullish continuation pattern. So if I was looking to trade this flag, and in this case, this is kind of how we're going to craft our bullish trade, I may take, when looking at a profit target, I may take that entire flagpole, which it looks like it was about over a $27 move when I actually hover over and it kind of shows that move. So it was a 10% move at the time. It was a $27 move in just a matter of 2 days. I'm going to duplicate that drawing and actually place it right at the breakout point or the top of the flag that we're seeing there. So you can see I just kind of put it as close as I could to the breakout point. And it's going to give me an idea of where price could run to. Now, this is not a guarantee. Patterns are never guarantees, but it's kind of something that traders can use as a guideline when crafting their profit targets. And the interesting thing to me is that this profit target seems to coincide with a level that's been touched many, many times. So this is giving a little bit of a resistance zone right around here where we had these highs in March. We had the highs back in November and again in October. So I wouldn't be surprised if price goes to kind of retest that level and finds a little bit of supply or finds a little bit of resistance there. Now, let's talk about the trade that we are going to craft with Amgen here. Now, I have almost $127,000 account, and this is kind of like a pricey stock here on Amgen. So a couple things that we could do. Now, we could take a long stock trade, which I'm not going to do today. I'm actually going to use the options market to have a little bit more capital efficiency when it comes to building out this trade. So I'm going to use a long call option to just be a buyer of the option to say we have the right to buy 100 shares of the underlying if it hits this price by this date. And we're just looking for to participate in the upwards move of Amgen that could be coming following that flag pattern. So we're going to craft that long options trade around really the price of where we think this could go. Now, something we want to keep in mind with long options, because options are obviously priced very different than stock. We want to look at factors like how long till expiration or how long that price pattern really developed. And we said it took about 2 weeks for that to form. That was really the end of September there. So it formed in a very short time. Another thing we want to keep an eye on is levels of volatility. So we may want to look for things like the implied volatility percentile to make sure it's still in the low range. We may want to make sure there's no upcoming events that could add uncertainty or implied volatility into the market. And something that I noticed that we have coming up in just over 2 weeks is actually an earnings announcement. So I want to keep that in mind as well. and typically before earnings, we see that increase in implied volatility just because of the uncertainty. We have option buyers really trying to protect or hedge their portfolios going into that uncertainty of an earnings announcement. So those are kind of the things that I want to keep in mind there. Now, let's kind of move over into the trade tab so we could craft this options trade. Now, since the pattern took 2 weeks to form, I could look at a shorter time frame, let's just say 37 days out from expiration or a month out from expiration, but I'm going to have about 15, 16 cents in time decay with each and every passing day here. So I may look a little bit further than that. I may give myself about 2 months for expiration, just to give myself a little bit of time, and we can actually look at the time decay. It's a little bit smaller here, not by much, but it is only about 11 cents here. So I'm going to go with that expiration. Now, another thing that we mentioned was implied volatility. We still have implied volatility in the lower third of what we've seen for the past year. So that just tells us we're still at kind of lower levels relative to where it's been over the last year as far as implied volatility. So my goal with this is when we see kind of the implied volatility increase going into earnings, and because the flag only took 2 weeks to form, my goal is to close out this trade before the earnings announcement comes. So that is my strategy with this trade in particular. I don't want to see a ton of time decay. I want to catch the move. I want to catch a possible influx in implied volatility since we are still relatively in that lower zone. So I am going to look at this expiration of the 19th of December, like what I mentioned. And the next thing I'm going to look at is just the different strike prices here, and maybe looking at where I could get a little bit of intrinsic value with a trade-off of where we could have enough liquidity or tight enough spread. So I can see this contract at the 300, that nice round number, has a ton of open interest, a ton of open contracts here. It does have a decent amount of volume traded here. It is a little bit out of the money, but that's going to be okay with me for this trade because the spread is tight. It's still less than 10% of that initial value. So I'm going to start from here, and I'm just going to right click on this, buy custom with OCO bracket. So I'm going to be looking to place an entry trade on this option, also place a profit target and a stop loss. So what I'm going to be looking to do is actually, in this case, using the price of the stock as a measure of where this option could go. And the reason why I'm doing that is because we're kind of seeing that initial breakout, but we're not seeing multiple closes above that level, or we're not seeing a certain percentage move above that resistance level yet. So I want to wait for a little bit more confirmation before placing that options trade. Look for a little bit more of a breakout to show that it's really moving in the direction that I think it's going to move. That's me just wanting to really react to price action rather than anticipate it in this case. So that is the reason why I'm going to place our options orders off of kind of the price levels that we looked at for the stock. So I'll be looking to place our price target for the option right around that $322 level in the stock. So if it doesn't reach that price within the matter of 2 weeks, I will be looking to close out that option anyways. And then I think for the stop loss, since this is the breakout candle that we're seeing there, and we don't know what price the option is going to be when we enter into this conditional trade, I may want to put my stop loss if price re-enters the pattern and goes below the low of this breakout candle, which we can see the low is 292.43. So that's what I'm going to go with here. So let me go and craft this. And let's just say we are going to place this options trade. Let's go back to the trade tab. We're going to place our entry on the options trade And we're going to do this with a 2% move beyond that flag resistance. So actually, I'm going to go back here so you can see the resistance a little bit more. So that flag resistance is about 296.06 there. So if I want to place an order that is 2% above that flag resistance level, I'm going to take that 296.06, multiply it by 1.02. That's going to give me an entry price of 301.98. So I'm going to go back here. I'm going to click on, actually, I'm going to change this to market order for now. Make this a conditional order. Pull this in the window so you guys all can see it. We are going to make this a conditional order to enter into this long call trade if the price of Amgen is 2% above our flag resistance. So if it is at 301.98, it's kind of hard to see it there because the font size is so big, but that does say 301.98 there. We're going to hit save. Now, something you could do, I chose a market order here, but just know the risks with a market order, especially when you have a spread like this. I mean, you're doing multiple contracts. You're filled at the next available price. So if you have kind of a wide spread, you can always make this into let me pull this back over here. You can always still make this a limit order on your entry. And since we don't know what the manual price is going to be, since we're basing that entry off of the stock price, you could always change this link for your limit from a manual price to, let's say, linking this as an offset of 10 cents more than whatever the mark price is or whatever the midpoint is at the time of the trade. So you could do that a little bit to just kind of protect yourself on some of those wide spreads. So let's just say we'll do that today. We'll make that order good till canceled. We're going to hit save. Now on our upside limit, let us also make these good till canceled because we don't know when they're going to get filled. So let's make this a conditional order based off of the stock price as well. And what price did we say? I think we said 322. I'm going to zoom out just to double check. Yeah, we said about 322. We don't know if it's going to get there or not, but even if it is on its way to getting there, we want to take profit 2 weeks out, like I mentioned, just because with earnings. So we're going to say when the price of the stock is greater than or equal to 322, we want to sell this option at market. So I'm going to use a market order for this one. Again, just be aware of those risks there. And then for the downside, just to kind of protect ourselves on the exit, again, we do not know what price the option is going to be. We kind of talked about using our stop loss based off of the low of this candle. So that is that low of 292.43. We don't know what the price of the option is going to be there. So let's just kind of put that in. Amgen is less than or equal to 292.43. And we are going to hit save. Now, we're just going to send that as a market order if it goes below that price, because if it goes below that price, we want to get out of our trade right away in that case. So this is just awaiting a market order, good till canceled, for when the price goes below 292.43. So that's kind of like acting as our stop, but again, it's just using a market order based on that condition to get us out right away. So time to double check everything. I saw a question in the chat. What if it flushes after earnings? Are we holding up until earnings or gambling and holding after earnings? No, we are planning on just holding this for the next 2 weeks because the time pattern, I guess the time that it took to form this pattern was about 2 weeks. We have a little bit more than 2 weeks going to earnings. And we talked about how we have that influx typically in implied volatility leading up to earnings. We typically have a crush or a crash of implied volatility after earnings, which kind of bakes out of the value of our option and hurts the long option holders. And it works for sellers, but it hurts us as an option buyer. So we want to make sure we do get out of this trade. I'm going to make sure I manage this within the next 2 weeks before earnings to just take away any of the risks of vol crush there. So that's kind of the portion of managing our trade that we're looking to do. So I'm going to hit confirm and send. We're going to double check our order. We are going to enter when it's 2% above our flag resistance at 301.98. And we are going to take profit at or above when the price of the stock is above 322. We don't know what the price of the option is going to be then. And same with if it goes below 292.43, if it goes below that breakout candle in the flag. So we're going to manage that throughout. Like I mentioned, we're going to hit send here. And voila, we sent our first trade. Okay, now let's pivot to the next trade that we're going to look at, where I'm kind of seeing some price patterns forming at a certain level of support. So what level of support or resistance do you see here in this chart? Throw it in the chat. If you see a certain price level that really sticks out to you here over the last year, I want to hear it. I want to see what your eyes are seeing, because for me, the zone that I'm watching is these prior highs before that March, April sell-off, and this range that's kind of been touched a few times right around that $28, higher 27s, and then where we just kind of found ourselves on Friday and earlier this week where we seem to be holding support. So, yep, I saw one in the chat, 27.35. Yep, that's kind of right around that level that I'm looking to as well. And obviously, when we look at support and resistance, it's not always one line in the sand. Sometimes it's a little bit of a zone in the sand. So sometimes it can trade within like a dollar zone, and we can still call that our support and resistance zone here. But the thing that I'm noticing is when price patterns occur, I guess candlestick patterns occur in this case, I want to be cognizant of, and as traders, we need to be cognizant of where they form in the context of the trend. And we can see the first thing we're going to do is look at price, see if there's any cut and dry support and resistance levels, and we found one. The next thing I want to do is look a little bit closer and see if there's any candlestick patterns that are forming at these support or resistance zones. And we can see just from the highs that were made last month, we've had a little bit of a downdraft, a little bit of a downtrend. And then just yesterday, we actually had a bullish engulfing candle forming at this pretty valid level of support. So that's something that really stuck out to me. We obviously had the test of support on Friday. We had a little bit of an inside bar day, which was that first candlestick pattern that I was kind of recognizing there, which shows a little bit of a pause when you have that inside bar where that body of that second candle trades within the entire body of the previous candle. That can signal a reversal or a pause. I thought it was interesting that it was occurring at this level of support. And then, of course, we got the follow through yesterday with that bullish engulfing candlestick. And for those of you that know what Caholds are, this was also a Cahold pattern as well. We had a close, which was right here, right at 28.96. A close above the high of the low day, which was this one right here, just engulfed 2 days of price action. And then we saw that follow through today on that bullish engulfing with a higher move up. Obviously a red candle, but we did see that higher move up. So what we're going to do in this case is, since this held support, we saw that bullish engulfing candle really take place at support. We saw that follow through from that pattern take place. I want to take a bullish trade in this example with this support bounce. So what I'm going to do is just take the current price of the stock, click on it, and I'm going to take a buy custom order, and I am going to look at buy custom with stop. Okay, so let's just kind of first talk about our entry. So this for me, we had a close above support. We had a hold. Today we had some follow through. So that's giving me enough confirmation to take this trade on the entry today. Now, some of you may look for other levels of confirmation. So you may look for 3 closes above that level, or you may look for, let's say, 2-3 percentage points above that level of support. Whatever your confirmation is, whatever your trading guidelines are, obviously you want to stick to that. I'm going to say that, we're near the trading close, and just for the purpose of today's session, we're saying that that's 2 closes above, and we got that follow through of that power candlestick. So I'm going to place a trade on the entry today and just use a market order. And then I am not necessarily going to place a profit target on this trade. I kind of want to see and let it ride a little bit. So what I could do, I could back the chart out, zoom it out to see if there's any longer term levels of resistance. I obviously see that this is the yearly high. That's only giving me about a $4 move in that case, which is probably a valid level where we would actually probably test that resistance there. So if we had that long stock position and we tested that resistance, that could be a place where I could sell a covered call against my long stock position in that case. We could sell a spread at that level. So that resistance level gives us a couple different ideas for placing a trade. Now I'm going to zoom out once more just to double check to see if there's any other resistance levels that are kind of looming above. And it looks like in the long term, we may see another, oops, we need to put this on a log scale. Look at me. I'm talking about log scale in the beginning, and I didn't even have this longer term chart on a log scale. So this is just looking at the last, 5 years going back to 2020. I see a couple other levels of resistance that we may run into if we should blast through this level of resistance at 32. We're seeing this little gap ledge, Let me try to redraw that. We're seeing that low taking place, that little gap ledge before the COVID crash, right around 38. So that could give us another longer term level of resistance that we may look at as well. So since there's a couple levels here, and we're going to watch this, maintain this trade throughout, we may even see next week when we look at it, if it's kind of near the highs, we may sell a covered call against it. So we're just going to leave that open there, but we are also going to look at having a stop order, just kind of where to place our stop. So let's take a look at where we could place our stop. Now, we could place our stop at the low of this bullish engulfing candle. So we could do that, and that low would be 27.47. So that would be kind of a tight stop. I'm going to look at how much it would be if we did a stop that was 2 percentage points below the current price. So let's just take 28.86 and take that times 0.98, which will give us a level. So that's still above where we are. So I guess that gives us 28.28 as a stop. So even if that was 2 percentage points below that level, that's still even kind of tighter to the price on where we are now. So I think we'll go with this low of this candle here. Another thing we could do too is if we wanted to look at a volatility-based stop, I'll kind of show you another idea that we could look at for stop orders. And just kind of keep in mind that stop orders, when we're kind of crafting them, there's obviously no guarantee where we're going to get triggered at when we decide whatever price that we're going to select, which in this case, let's just say we're selecting the low of that candle, which is what we said, 27.47. I'm going to put that in here, 27.47. There's no guarantee that we're going to get out at 27.47. This is just one way to manage risk that says if the price of the stock goes down to 27.47, we want to get out immediately. We want an immediate execution, and we will take the next price available. So we would take that market order there. But another idea that we could look at as far as a stop, and this is more of like a volatility-based stop, is an average true range. So this ATR. So this is another idea that you could use as well. Now, this ATR is basically going to take a look at the true range of the last 14 days. So what that means is it's going to look at the comparison of the high to the low of the current day. It's going to also compare the high to the previous close and the low of this candle to the previous close to get a true average range for the price of the stock. And then that's going to take the 14-day average of that. So that's going to give you a numerical measure of just kind of the average true range in this case, or the average volatility that could show up in the price of the stock. So it's giving me an average true range of about $1.03. So some traders may actually look at that and use that in a trail stop. So they may say, I want to place my stop order with a trail of $1.03 to say if it goes beyond that, I want to exit this order. Some traders may put a tighter stop on by taking half of the true range, so they may do that as well. So that's just another idea to kind of keep in your back pocket on just an idea that some traders will use for stops. But I'm going to pull this back open. We're going to go with the low of that candle there. And we're going to place a stop there. We're going to make this good till canceled. And the other thing that we need to keep in mind too is just our trade size, trade risk, which we didn't cover too much in the last example. I want to make sure we cover it in this one. We do have an account worth at roughly $127,000. So I'm going to take that, and I don't want to risk more than 5% in one single trade. So that gives me a trade size of about $6,350. So to see how many shares that we could purchase with Carnival, I'm going to take that $6,350, divide that by the current price of the stock, which is $28.91. And I'm going to get $219.64. So I'm just going to make this, let's just say $210. Keep it an even number. I heard traders like even numbers. So we're going to go with that $210, an even round number there. And we're going to also just see how much risk we would be taking as well, because we don't want to take more than a risk of 1% of the account. So if we are trading an account size worth $127,000, we don't want our risk to be greater than 1% or 1,270. So I want to make sure our stop is actually tight enough. And what I could do is just take our entry price of, let's say, $28.90 in this case, minus $27.47, which is $1.43. We're going to multiply that by 210 shares. That gives us a trade risk of just $300. So we are well within our risk parameters there. So that's kind of the last thing I wanted to go through. And we're just kind of following our process, not only for the trade setup, but also just keeping within the parameters of the account that we are looking to trade. Now let's look at our confirm and send and just confirm that order. So we're buying 210 shares of CCL at the market. We are placing a stop at the low of that candle of support right around 27.47. We are just going to let our profits ride in this case. So we're going to hit send. And there we go. We have our order that was sent here. Now I'm going to take a look at the chat, see if there is any questions there. I had a question on RSI or stochastic RSI. That's actually something that a lot of traders look at as far as momentum. And in this class today, I am just strictly looking at price. I am strictly looking at price patterns that's occurring. One thing I could do is add momentum to just see at these support or resistance levels to see what's going on with the RSI and things like that, which I took a little bit of a peek at the RSI since that's one of the tools in my toolkit before I put on this trade or before I showed it on the screen. And something that I noticed as this was forming, we were actually making lower lows in price, and we were actually making a little bit of a higher low in the RSI. So a little bit of a bullish divergence there. And where we were still hitting that support, we had that candlestick pattern set up. I thought that was interesting. So that's kind of what we're looking at with the RSI, and that's more momentum. We're just more trading the price patterns and the trend in this case. Let me see any other questions here. In this scenario, price is hovering between support and resistance. How would price work here? So we may see price trade in a little bit of a range. We obviously saw that bounce. So the next logical level that we could kind of see it bounce up and gravitate towards, if we're seeing a kind of a reversal in this trend, which this pattern suggests and the follow through today kind of suggests, we may look up towards that 32, almost $33 range, and we may trade that range. And that's why I wanted to keep our profits, just kind of let our profits ride, because next week, if we're kind of trading near this range, may want to sell a covered call at that level or near that level. So that probably answers your question in the chat of as far as when to do a covered call. Yes, I'm going to look at that next week. I just want to replace one step of the trade now, but you could always do a buy right. So you could have always sold a covered call at the same time as we bought the stock. So that is, of course, another trade idea. You could also sell a bearish spread at this level, a bearish call spread at that level as well, to just say that you think the price is going to kind of hit that resistance right around 32. So with just a couple minutes left, let's just review a couple price patterns that I'm seeing in the market that we may take a look at next week. So I did see ARKQQ, another quantum stock. It looks like it had a little bit of a bearish engulfing candlestick taking place right on this cup and handle pattern support. I found that interesting. That may be kind of an idea there. American Express, we had that cup and handle breakout. We had that support retest and a little pivot from there. Let's take a look at Boeing. We had that inside day. It's kind of trading right around support there. CMS Energy, we're looking here. I've noticed a little bit of a triangle pattern. We've had 3 or more touches on the upside resistance. We've had 2 or more touches on the downside. You really only need 2 touches of resistance, at least 2 touches of support for it to be considered a triangle. We've actually seen 2 closes above that today. It's trading above that today. And then let's look at a couple other ones that I'm keeping on my watch list here. We have a cup and handle pattern, which is a bullish pattern here in Dominion Energy. I covered this one on Morning Movers today. We had that cup and handle or even like an ascending triangle breakout of Walmart. So you could look at that one a couple different ways. We have another ascending triangle here in TPR. And then Applied Materials, this is another one. We have this very large, almost year-long pattern that had formed for an inverse head and shoulders, which is typically that bullish reversal pattern. And then we've almost had this little flag-like consolidation where we had that power move up through resistance, had a little bit of a pullback or that flag, and we're seeing a little bit of a breakout today. So all different ideas of price patterns. So I think we covered a lot today. We looked at a ton of different price patterns forming. We looked at the indexes. We managed some of our trades. We placed some new trades, maybe gave us a little hint to some trades that we could even place next week. So I just want to keep in mind, kind of stick to your rules, stick to your process like we did here today when we walked through all those steps of looking at our trade size, position size, and our rules for confirmation. And if you liked this video today, please give it a thumbs up. This is only my second time teaching trading price patterns, so I'd love to see you more here. Would love your feedback. If there is a survey in the chat, please give me your candid feedback there. And if you would like to see more of these price patterns on a daily basis, please follow me on X at Rachel-CS. I want to thank Scott Thompson there in the chat. Please give him a follow as well. And please like and subscribe to our Trader Talks Schwab Coaching on YouTube. It'll help the algorithm. We have a lot of shows there day in and day out, and we enjoy teaching these. So thank you all for coming today, and I'm excited to see you next week. So thank you all.